Hello, everyone, and welcome to the Forex webinar. Apologies, we've started a couple of minutes later than we anticipated. We've just sorting out our audio equipment as usual. Thank you so much for taking time out to come and join us for this session. It's certainly we weren't sure when we set it up at this time whether there was anything. Market might be a little bit quiet, but actually, if you're looking at your screens, you know there's quite a lot going on with the Japanese yen, and funnily enough, it's what we were going to talk about today. So how fortuitous is that? However, before we start, as you know, trading can be a very risky business, so please don't ever think of using money that you cannot afford to lose. Right. Just let's get the disclaimer out of the way. As always, those of you who come regularly will know we will be looking at the charts through the prism of volume price analysis. This is the main book, the book where the concepts are laid out. It's a complete guide. There is actually a Forex version as well, which also we're really delighted that sells very well. It covers the concepts and obviously more specific to the Forex market. And there are also companion books of worked examples of VPA, because those of you who use the methodology will know that the signals that we see on the charts, they repeat. You know, you can find similar patterns, you can find similar setups in all the time frames. And once you get to grips with understanding the relationship between the volume and the price action, and you also bring in the support and resistance and your candles and your candle patterns, and you look at things in multiple time frames, you can then decide which of those setups, if you like, you prefer, you like to trade. And in fact, that's quite pertinent to what we're going to look at today, to do with the yen. And I will get David to explain that, because this yen trade that he's going to be describing in greater detail, it's pretty much been his baby for a little while. And the other nice thing about what we're going to look at today, we're going to actually look at some of the slower time frames, because I know we do look at the faster time frames because obviously we like to see the price action develop quickly. Sitting on an hourly chart, you don't have to sit here forever. But as I said, because the setups reoccur in all the time frames, that's one of the great advantages of volume price analysis. There's lots and lots of advantages, but that is one of them. And once you've done that, you can then decide, you can put your own spin on it. You can put your own indicators. I know we've got some of our Forex students here. We've got some users who are have already invested in our proprietary quantum indicators. But you don't have to do that. You can use a lot of standard indicators, moving averages, Fibonacci, and taking all that together, you can then develop the tactics that first of all suit you as a personality, and secondly, they are the appropriate tactics for the time frame that you are trading as well. Because what VPA helps you to understand is the structure of the chart. Are you in a trend? Are you in a congestion? Are you looking at a potential reversal? Are you looking at a potential breakout? And as I said, the yen and the yen pairs have delivered the answers to all those questions. So really, really happy about that. If you have any questions, please just put them into the chat box. We'll be happy to answer them. And if not, you can email me, anna@annacoulling.com, or you can email David at quantumtrading.com. Right. Before we start talking about the yen in particular and why we've suddenly got this burst of volatility, it is part of an ongoing narrative with the yen, which really goes back to July, when the BOJ announced, seemingly out of the blue, that they were going to relax what they call their hold on the yield curve. And it caused all sorts of reactions in the markets. one of the reasons why the markets react so strongly when the BOJ do something a bit unusual is, first of all, those of you who are into forex already and who trade regularly and will, aware of the fundamental releases to do with Japan. That until recently, it's all been a bit of a yawn fest with the BOJ because they are very, very conservative. They still have negative interest rates. So we never expect very much whenever the BOJ say or do anything. But that's really all about to started to change, and it's going to change even more. And one of the reasons it's causing ructions is it's to do with broadly the carry trade. And those of you who have been in forex a while will know this is where investors, they borrow in a low yielding currency and they go and buy assets elsewhere. And this is also in Japan, because Japan, the yields, the return on the money in Japan, because of negative interest rates, has been pathetic or next to none. They have been happily investing all over the globe. When that money when those funds start to come back, it's going to cause problems in the assets that they've invested in. The BOJ have they're huge. Is it ETFs, David? Yeah. They've got ETFs. They invest in bonds. So you can see very, very quickly how the Bank of Japan could actually cause a kind of black swan. Everybody knows what in the financial world what is going on. And it's just going to take some kind of trigger to unleash, I wouldn't say quite Armageddon, but a lot of mayhem in the markets, and particularly obviously risk assets such as equities. All the central banks, all the financial centers are intimately connected. There's money flowing this way and that way, and it all flows through the forex market. And this is what we always say, and people hear us say things and say, well, what are you talking about? Because that's where there is the exchange. It's reflected obviously in the exchange rates, and it's the money flow. It's where the money is flowing to, and at some point that flow is going to go back, and if you're talking about trillions and trillions, it is then going to have when it comes back from where it has gone. You can see that it can cause some problems. So the BOJ is in a not powerful position, but it has if it's not handled carefully, it could cause some serious problems for everyone. That's the US, the UK, every major financial center. And I'm really not overstating that. We will have to wait and see. Markets are also very, very complacent at the moment. They're kind of creeping up. They don't want to fall. Everything's sort of holding up. Yes, we're going to have a soft landing. Yes, we've avoided a recession. Well, maybe we have, and maybe we haven't. And the linchpin is the bank. Ironically, is the Bank of Japan. Now, we'll see how that plays out in the next weeks and the next few months. And one of the reasons why there's been this reaction today is that Ueda, who is the governor, has actually said that 2024, he's made what the market has taken as a hawkish statement, which is why the yen has suddenly strengthened. The Bank of Japan have been very worried about the yen weakness, which is kind of ironic because they like a weak currency because it's good for exports, but they don't want it too weak. It's almost a bit like Goldilocks. So that is a very general, very broad-based explanation. There's all sorts of other things going on. There's some sort of massive option expiry coming up this this Friday to do with the yen. It's an out of the money call, and I think somebody's bet something like 1.2 billion, and I think it's probably made money on it already. That's another issue, and we will do a session specifically on Japanese bonds, and also the impact that options can have on the bond, on Japanese bonds, and also by extension then on the currency as well. But that's something that we will do next year. In the meantime, we have to find out, well, what is actually going on, because we can see this on our charts, and certainly the great thing with some of our indicators, this was the Japanese yen strength it's been signaled for some time, and it's one of the reasons, especially if you're a longer term trader like David is, that is what he looks at. He looks at the CSI. It's been so oversold. Nothing stays oversold or overbought forever. And which is why he has the end trades that he has at the moment. But one of the ways you can kind of get to know your currency a little bit better is you can filter on your economic calendars. I think if you were with us last week when we looked at the dollar CAD in specifically, we had a look at the trading economics calendar. And what you can also do, I'm not sure if I showed you this, but it also has a drop down menu under categories, so you could even be more specific. So if you're very interested, if your focus is on interest rates, and of course for forex we have to know what interest rates are going to be doing, because that's one of the drivers for currency pairs. You can actually set up a separate tab, and that will give you the news that it's coming up ahead this is for the US dollar. And of course, the main event for the US is next week's FOMC meeting. I've actually got one set up for inflation, and I've actually got one set up for bonds, because I keep a very close eye on the bond auctions and what the yields. And you can do the same for Japan. Now that's great. Not the disadvantage, but there's one other element, especially if your background knowledge is not strong at the moment, and you want to know a little bit more. If you go actually to Forex Factory, you can do the same thing. You can filter on a currency, a country, and it will tell you what the news events are that are coming up. But what's also interesting is it also has a filter on similar to trading economics. But what I find very interesting with Forex Factory is underneath here you will find it pulls in comments and articles. That's what I was trying to say, from the media. So that if you see something like this, a yen bull spy a ray of hope in BOJ policy hint. Well, I've just said to you that it's UADA, and it's just something I follow, so I'm aware of. But maybe you think, well, what does that actually mean? And you can just click on it, and you can go and have a quick read around it. This is a very good site, bnmbloomberg.ca. They are very good in their articles are very concise, and it just allows you to build up your knowledge about a currency in sort of bite-sized pieces. That's what I'm trying to say, and especially when so much has been going on with the yen, certainly today. It's just a good way to think. Well, you might come to your terminal and you think, well, goodness, what on earth has been happening? And it's just a quick and easy way to see why possibly things are the way they are. And of course, you will have your news feeds, but news feeds they scroll through so quickly. But with Forex Factory, they do stay up there a reasonable amount of time. Right. So that's a little sort of tip for you. Meantime, I've got TradingView and I've got MT4, and David has NinjaTrader, haven't you, David? And he's got NinjaTrader. So Let's have a look. And in fact, it's rather nice to go back to the pound yen, because we did the pound yen 2 weeks ago when we were looking at it on slightly slower time frames. And just to give you an indication of what it's been like for the price action in the yen in the pairs, what you can do, there's a number of things you can do with MT4 and with all the platforms, is basically set up a profile with all the pairs. Because when you are selecting, if you have the CSI, a currency strength, one of our currency strength indicator, or any other kind of currency meter, currency strength indicator, and you will see very, very strong moves going into a particular one currency. In this case, we've got the yen, which is doing giving us the example that we want. Is you then have to decide how are you going to pay it. That's just the flow into the currency. Where is the best trade going to be? Now, sometimes that can depend on the time zone. So it might be stronger in Asia, or it might be what happens when it comes to Europe and London. And then you've obviously got the New York session, because we always say this is a 24-hour market, but it's actually 3 separate markets, and there's news for each market, and you get a strong move in one in a pair, and suddenly it will start to peter away. It will die down because it was more local to that market. The traders in that time zone were really invested in that particular pair, one of the yen pairs. That currency may be going up or down. It will continue. Money will still be flowing into, but not in that pair. It rotates into, say, for example, you have the Aussie yen in Asia, very strong flows into the Aussie yen, possibly because you've also got Aussie news. So you've got good divergence. You've got a good reason for the Aussie yen to move strongly. But possibly by the time it comes to Europe and London, the interest has kind of died down a bit, but there is still overall market interest in. We're talking about the yen at the moment. So where is that going to switch to? The logic is it's going to go maybe to the euro and to the pound yen. That's fine. So you have that little window in the Europe and London, and then you're going to come up to New York. Is that going to carry on? Possibly. Maybe it's going to switch to the CAD yen when we looked at the dollar yen, the dollar CAD last week. So you have to be aware of these changes. It's not necessarily a change in overall sentiment to the individual currency. It's how that sentiment is going to be expressed in the different pairs. So you've really got to have a good a view. And by looking at all the pairs, I've actually got these on the hourly because we can see where the sort of slight shifts occurred, as it were. And it's also a great way to look at the hourly chart. This is the hourly chart for the pound yen. And what do we see before we have this this monumental move in the yen? And let's look at the timestamp here. Actually, what have we got? We've got today's the where are we here? You've got to be careful with the with MT4 because you are about 2 hours behind. We're looking at the 6th. This is up to the 6th, and we can actually see that the move in the break, if you like, lower in the pound yen actually started overnight. Now, it may just be because of the yen and because of the BOJ and because of the very particular circumstances surrounding the yen. In fact, we are looking at which is very unusual, a consistency across all the pairs. So the yen's been bought against everything. That's what I'm trying to say. But if we look at this setup in the terms of what are we looking at a chart, and this is an hourly chart, and you can't stay at your screen to trade the faster time frames. What are you seeing here? You can see a massively long period of congestion. It actually started on Monday. What did we get on Monday? We have the volume point of control. We also have the weekly Camarilla pivot, which is the S3, which has provided some tremendous support. Now, for those of you on the 5-minute chart, Possibly there were some opportunities in this candle, possibly in that candles. But look, the candles are getting narrower and narrower and narrower. And it would have been awful in the faster timeframes. But as an hourly trader, you're not really interested. You're just waiting. What you're seeing here is a massive, fantastic example of Richard Wyckoff's second law of cause and effect. You have this long cause since Monday, where it's basically doing nothing. The candles are getting narrower. The pivots tell you that it is a congestion. They're actually narrowing. It's like a spring that's being wound up. And what we're waiting for now is a trigger, and it was delivered to us by the BOJ, but it was delivered in the Asia session, and we get this wonderful waterfall that comes all the way down. This is not even the European open here. Where are we here? This is 8 o'clock. This is the European open, 6 o'clock, and it's just been one way traffic until we get to mid morning, when we potentially have this reversal. Not very much, but it has actually continued lower until now, until just the hour. But we now have a candle with this massive wick to the bottom of the candle, where it's we have this reversal. But from looking at this on a what could you have done? Well, you can see this congestion. It's a question of being patient. And in terms of how you would trade a time frame like this, is you'd probably be looking at something like a limit order and looking at just using your levels. There's one advantage of this kind of breakout trading, is that where you place your stop, because you don't have to have a hugely wide stop, because this is such a strong, once that breaks this support platform, it becomes a tremendous resistance area, and your stop would be possibly somewhere above one of these pivots here. And if you're wrong, it doesn't really matter, because your risk is in terms of stop loss is actually very, very small, and then you could then follow it down, as we have seen here. And now what we have is a potential reversal. It's pretty much been the picture across the yen pairs. But if we look at the CSI, this is where we are with the yen, massively overbought. On the faster time frames, we've already seen that rollover, and at one point it was just buy yen and basically sell everything else. Quite unusual, doesn't happen all the time. But regardless of what we've seen on the yen, if we hadn't seen this today, we would still have had all the yen pairs up, and we could have seen perhaps a little bit more of a differentiation in the price action across the pairs. It's just we've had this very unusual situation with the yen, and it would be silly not to highlight it. But next time we'll have a look at maybe another currency, and you'll see more of a differentiation of price action across the different different time zones. To go back to the CSI, if we look at the daily, it wasn't not really the daily. You can see the potential for a turn at that point, but it was more on the weekly chart, where we had a that was the first that was back in July. That was when UADA said, yeah, well, we're going to be tinkering with the yield control, and the yen strengthened briefly. After that, it just continued to slide lower. But this is very much the point, because that point was lower than there, and it was around here, I think, David, wasn't it, when it was so oversold? We thought, right, this is possibly a potential turning point for the yen. But we do have to remember, currencies and all markets can stay oversold and overbought a lot longer than we can stay solvent. The other indicator that we use is also the matrix. The matrix can also help you select a potential pair. we've been looking at the pound yen, but actually you could say, well, maybe this is what I said about a change of in time zones. Look at the CAD yen. Look at the dollar yen. Maybe we should be looking at those two. These have already reversed. This is the Aussie yen, and the New Zealand yen would be going into Asia once again, obviously in a few hours' time. So the matrix can also help with potential selection in terms of reversals or breakouts. It just gives you the matrix saves you having to look at all the charts. And if these numbers are continuing to tick lower, as we can see here with the dollar yen and the CAD yen, it's not quite ready to a reverse high. It probably has reversed higher, but it is now going back down once again. And on the shorter time frames, you then have, if we stay with the pound yen, and this is where you have to use your multiple time frames. Let's have a look here. On MT4, you've obviously got the daily. We've got the hourly, as we can see here. We've got this massive spike here that we had on the hourly. We've got the 15, the 5, and you've actually got the Renko as well. Now, the issue we have at the moment is whenever you have a volatility candle with a big wick to the bottom of that candle, clearly we do have the potential for a reversal and also some congestion within the spread of that candle. Whenever you have massive volatility, it has to die down. And the key level now here is the high of that candle. That has to be taken out if we are going to get a solid reversal after that big move lower. And then it's back to looking at your levels and deciding, is there an opportunity to take a trade to the long side? You have to remember also that reversal trading from the short to the long side, you have to be patient. Markets fall very quickly, but they grind higher. If you use the Renko is actually saying it's signaling there's been a change in the trend dot, but the trend monitor it hasn't transitioned to bright blue. You also have to look at the time. This is now, certainly here in the UK, it's 6:30. So the market is going to be calming anyway. And you think, well, is it actually worth it? Maybe I should wait and see what happens tomorrow when the market starts up again in Asia. This is the wick that you would be looking at, but it's perfectly possible that could simply come down here and that complete as a big down candle. We just have to wait. But it is a volatility candle. The size of the volume underneath it is certainly an anomaly given the range of the candles. So whatever happens, you have the anomaly there in front of you. But given the time of day, you may think, well, okay, I'll wait just to see what happens and how this market calms, and just to see that reflected on the trading view. This was the chart that we looked at a couple of weeks ago. We could see, we were looking at the time, we were looking at it going up, the potential reversal. If you put those two candles together, you kind of get a little shooting star. We can see a lot of volume coming in, price not really falling. You would expect that to be much that candle to be much bigger, and in fact it did actually try and go higher, but again that was another anomaly, as it were, given the amount of the volume that was underneath it, and then gradually it carried on lower with the volume actually falling. And if I saw that, I would say, yeah, that's fine. It will probably stop here and look to reverse, and then bang, it got hit by the Bank of Japan. These things happen in trading, particularly in forex, where central banks are concerned. But that is an anomalous candle. You cannot have a candle that size with that amount of volume underneath it. So the chances are it probably will reverse. We shall have to see what happens. Right. if you've got, as I said, if you've got any questions, just put them into the chat box, and I'm going to pass you back to David. Is that all right, David? Can I do that?
Absolutely fine. No, you can do that.
Can I do that? Fine.
Yeah. Hi, everyone. Hopefully you can see my screen. And yes, Anna can see it, so hopefully you can too. Good to see you. And yeah, it's been interesting. That's putting it mildly. I've got the CAD yen up because what I wanted to really talk about is, if you come along regularly, you're familiar with the term basket trading, and basket trading is really just focusing on one currency and putting together a basket of those currency pairs related, all hopefully pointing in the right direction, of course. And that's a very traditional way of trading. It's something Anna and I use a great deal. Whether you select the dollar, the yen, the pound, whatever it is, doesn't matter. You just put together a basket based on that. And really only one rule applies, is that you open and close the whole thing together. So you don't cherry pick, you don't pick off your winners and let the losers run, hope they'll return to profitability. You just take it as it is. Now, it's not for everybody, because if you get it right, you win big time. If you get it wrong, you lose big time. Obviously, you've got stop losses in there and all the rest of it, but it's a very attractive way of spreading risk across a matrix of currency, of a currency. And the point I wanted to make about it is that when you think of it in very simplistic terms, you might think, well, okay, they're all going to move in the same direction at roughly the same speed. And of course they don't. And they all have, and I'll show you on the much lower time frames on the currency strength indicator, which I've got on the next tab, I think, which is really what I want to get to, is that they move at very different speeds. It's easy to fall into the trap and think, well, if everyone's buying the dollar or everyone's selling yen, whatever it may be, then all those currency pairs are going to move in the same direction. They don't. They move at slower speeds. Some of them move faster, some of them move slower. Sometimes they move in opposite directions, which is a bit off-putting. And that's why within the basket, you have to accept that it is a qualified and quantified risk, but it's not one that's guaranteed. And as I said, if they all go in the wrong direction, then you've got 5 or 6 currency pairs that are all going against you. The reason I picked out the CAD yen is because it differs very much from the others in the yen matrix, particularly the ones I'm in, which are pound yen, New Zealand yen, Aussie yen, and I'm in the CAD yen as well. But what I wanted to highlight with the CAD yen is that Anna's talked about levels, and it's very true here, because you might have decided to put together a yen basket and you're looking at them and they're all different. But the thing that strikes you about the yen pair particularly is obviously it has a very, very tight range, or comparatively tight range anyway. It goes from 100 up to about 110.50 odd. So you've got a very, very clearly defined ceiling of resistance and a very clearly defined floor of support through here somewhere. Now, obviously, this is on the daily chart. So today has been an exceptional one, but it comes back to this whole issue of, if you can be patient and wait for congestion trades to come to you, they do pay off big time. You just have to wait, and patience is the key. I'm not suggesting you would have sat through this since when it was back to September, although you might have done. But the point I'm making is twofold. First of all, this could be a 1-minute chart, and it's just a question of being patient and waiting for those opportunities to come along, which has arisen today, for whatever reason. And then you have a very clearly defined area of to place your stop loss, which is up here somewhere, assuming it fits your money management rules. Even if it's lower down somewhere here, you've still got a massive amount of protection in here in terms of price protection created by the market. And therefore, it's not you deciding on a level because it fits some money management rule that you have to adhere to. It fits into a pattern created by the market, and therefore it has more strength. And that's the beauty of breakout trading. But the key point I wanted to make is that when you look at these charts and you look at the differences, if I change this to Aussie yen, for example, if I can type that, there we go. Let's change the Aussie yen. Very different. They're very different structure of chart. The Aussie was congesting through here, but then it actually broke through that level and carried on much higher. So completely different. If you go to the New Zealand yen, have a look at that one. There we go. Again, the nice thing with the New Zealand yen, we had a ceiling of resistance building here, which was relatively strong. But again, not the same structure as the CAD yen. So you get the point. Let's go back to the pound yen. There we go. And that's what's happening on the pound yen. And again, very different structure of chart. Not in congestion, it's been rising. As Anne said, this was back to the initial announcement, I think, from memory. And now we've come literally pretty much all the way back down there. We've got this huge volume spike in there as well. So just pop that down there. These are much faster time frames. I've got 1, 3, 5, 10, 15, and I've got the daily up here. But what if I go to the next tab? Sorry, the one after. Come back to that one in a minute. This is CSIs, and as Anna said, we spend a lot of time on the intraday charts, not because we believe intraday trading is the way to make money. In some ways it is, and in some ways it isn't. It is more stressful, and you have to be able to manage the emotion and be suited to it. And a lot of traders aren't. So if you feel uncomfortable intraday trading, don't do it, because if you feel uncomfortable, you're not going to be successful because you're not comfortable doing it. You have to be comfortable with what you're doing in trading. This is the CSI on the one on the sorry, that's on the, that should be on, I've got the month, sorry, I got the week there, that should be on the day. Let's change that to the day. Where are we? There we go. That's on the day, that's on the week, and this is on the month. And I looked at this on the month some time ago, and for those of you who come along regularly, you'll know that my eye is always drawn to the tops and bottoms. It doesn't matter if I'm looking intraday or whether I'm looking longer term. I'm always looking at the extremes because I'm greedy, I want to get in early, and I'm prepared to accept that in getting in early, I have to sit through an awful lot of oscillations, and therefore my stop losses have to be set much wider. And it's very true in the current situation, because I saw the yen over here on the monthly, and I was quite happy to sit down here and wait and wait and wait and wait for this to break. And I'm still, you could say, well, it's already broken. Well, okay, yeah, it's starting to break higher over here. It's already rising very strongly on the daily. It's breaking up on the weekly, and it's just started to move on the monthly. And I'm looking at this from a monthly perspective. So the issue is, how long am I going to stay in this? And it's also a question of, if you get in early, everyone today there will have been all sorts of trading opportunities, people regretting the fact they hadn't got in early, looking at the chart and thinking, oh, why didn't I got into that? Well, I got into it early because I'm prepared to sit through it. It's like the call option that's out there. I mean, I don't know how long that guy's had that trade on, but he's probably had it on a long time. And he will make an absolute shed load of money. I was going to say something else there, but he will make a shed load of money. But then you haven't sat through what he sat through, which is basically patience, watching the price oscillate about, really not going anywhere, which is what I've done. And now I'm benefiting hugely because the market has crashed and I'm on the right side of the market. And in addition to that, I'm on the right side of the market in 4 pairs. So I'm not just benefiting on pound yen, I've got Aussie yen, New Zealand yen, and CAD yen, which are all delivering at the same time at pretty similar speeds. So I guess the next question is, well, how long are you going to sit there? Because the daily has been rising quite strongly, sure. The weekly is now kicking up and the monthly has hardly moved. Well, you don't expect the monthly to move very much because it's a much, much slower pace. So am I going to sit through some oscillations down here? Yep, for sure. Obviously, I will look at the charts on a regular basis. I'm not interested in what's going on in the 5 or 15 minute. I'll look at the dailies and look at the weeklies and just base it on what I see there. I'm aware that we're coming into a holiday season, so I have to make a decision. Do I want to sit through the holiday season and out into the new year? What's going on in the global market? What's going on in the global fundamentals? Is there going to be a major correction in risk assets? And put all that into the mix and then make a decision. I can always jump back in again, but you play it by ear and you just see what's what. The difference is that I said this yesterday in the stock program, we trade all sorts of different time frames, and the stress on something like this is negligible, because I'm not looking at the chart every 5 minutes. I have really no interest, because it doesn't impact me. I don't care what's happening. The latest news release, fine, okay, it goes against me, fine, okay. It's an intraday release, blah, blah, blah. So all I would say is that we don't spend a lot of time on the slower timeframes, not because they are not important, not because you cannot make money with them. You can. And for many traders, and of course for investors, particularly in stocks, where we're looking at longer term, then that is what you are looking at. You are looking at the longer term. It is less stressful. The next question, which I suppose is your starter for 10, is guess which currency I'm also looking at. No prizes for guessing. It's Swiss up here. Very, very heavily overbought. That is going to turn. I can't tell you whether it's going to turn tomorrow, next week, next month. But if I'm prepared to sit in that for a period, then I know full well at some point I will benefit, but it comes at a price, and I will have to lay in some fairly hefty risk on the table to get that heavy return, because I have to put a much wider stop loss in. I'm not going to go in here and put a 10 pip or a 20 pip stop loss on here. You're going to be putting a stop loss on here of hundreds, but then the return is thousands. And really, that's what it comes down to. It's all to do with risk, because risk and return go hand in hand. It's as simple as that. So it's nice to look at the slower timeframes for a change and really just look at what's going on. Now, in the context of it, there's another aspect to this, which is looking at it from my perspective of a very long-term monthly trade, if you will, where I've got the yen here and I'm looking for the yen to turn up. Now, what I don't particularly like at the moment, certainly from my perspective at any rate, longer term, is if you look over on the weekly, the Aussie and the New Zealand's have already turned up quite strongly. So from that basket perspective, I'm really looking at a potential for a yen that's rising, and the Aussie and the New Zealand will be rising with it. So maybe those trades aren't going to deliver very much because when you see the currencies moving in tandem with one another, then there is no momentum in the trade, because ideally what you want to see, and we've explained this many times, is you want to see a strongly rising currency counterbalanced with a strongly falling currency. So for example, over here on the daily, we've got the yen rising very strongly and the euro has been falling very strongly. So you don't need to look at a chart. When the yen was oversold here and the euro was overbought up here, this is a fantastic trade, because you've got a very steeply falling euro and you've got a very sharply rising yen, predominantly, other than the dip here, but generally speaking, you've got a rising yen. That would have delivered a very strong trend. So when they're rising or falling together, they're not delivering a very strong trend. So from my perspective on the yen trades, I've got that in my mind, because really the only one I suppose that is going to deliver from the context of falling versus rising is the CAD at the moment, because that's falling and the yen hopefully will be rising some more, and then the CAD will fall some more. So potentially my strongest profitability, if you like, is likely to be in the CAD yen, although I'm in profit in all of them anyway by virtue of the strength of the yen move. But over time, over the next few days and weeks, the strength may well come from be stronger in the CAD yen, or the profit return will be stronger in the CAD yen than probably it will be from now on in the Aussie and the New Zealand, if that is the way they go. So you look at all these things and you pull it all together, and then obviously you've got decision time to make. But it's very nice at the moment, and a really profitable day, which is great. If we go to where do we want to go? Do we want to go to the matrix? Yeah. We'll go back to the chart. This is the pound yen. I mean, if we look at it on the very fast time frames, lots of VPA lessons here. Obviously, let's go to this one. Obviously distorted by what's gone on. Ton of volume. Obviously, you've got volatility everywhere. And when we get the volatility trigger, then inevitably what we're looking at is potential reversals, potential congestion phases developing. Huge amount of volume under here. We know there's buying in there. There has to be. There's a really deep wick to that candle. So inevitably there is going to be buying. But then as you see that develop, you look at the volume profile that's shaped with it, and it's falling volume. on a rising price. So how far is that likely to go? Well, it's probably got to about where it's going to get to, because it really has run out of steam. You've got this arching effect, which I've talked about many times before, where you get narrowing spreads. This is all in the context of a fairly dramatic price pattern, but nevertheless, it applies universally, where you get narrowing spreads. You've got wicks to three of those four candles there. You've got a tiny little indecision candle there and a lot of volume, but you've got wicks to the upper body here. So it really is telling you, yeah, okay, we've had a reversal, and there will have been traders who've made money in here. But generally speaking, you've got falling volume and rising price, which is anomalous for the slower time frame. We're on the 3 minute here, so if you're looking at this, over a 10, 15 minute time horizon, that's what it's telling you. We're now into a congestion phase. We're starting to get floors and ceilings built, and you might be able to be looking at this as an opportunity to take a trade to the downside once we break below a particular level in the congestion phase. But there's all the typical lessons here from VPA across the piece. When we go up to the 15 minute, and massive candle there. Just pop that up full size. There we are. Massive candle, ton of volume, and inevitably, because it's closed so far up the candle, you're going to be enclosed within it anyway. Question is, how long is this price now going to oscillate between 178 and 180 before it breaks one way or the other? I'm hoping it breaks the downside. It might not. Might well break to the upside. We will see in the fullness of time. Now, I mentioned the currency matrix, and this has been oscillating around, as you would expect. We're back on the very fast time frames here. I've got the 1 minute, the 3 minute, and the 5 minute here. And the currency matrix is one of two fantastic tools for showing you what is going on across the matrix itself, what is going on in the yen matrix. Because if you are trading a currency, certainly from an intraday perspective, you want to be trading with the universal flow of everybody else. Is everybody else buying the yen or selling the yen in your time frame? And ideally what we want to see, and it was actually set up this way about 10 minutes ago, 15 minutes ago, I think. Bear in mind we are in the fast time frames here, but where you see this arrangement where you have all those currency pairs stacked neatly one on top of the other, the beauty of the yen pairs is, because the yen is always the counter currency, you don't have to worry about the inverse, because on most currency pairs you'll get some at the top and some at the bottom. With the yen, it's always very easy to see because they all align in one direction or the other. So what you're seeing right now in terms of a 1 minute time frame at any rate is very much we are seeing yen buying. And the way to use the matrix is the way it's set up here. It's across multiple time frames. Remember, the matrix has a very short look back period. It's only looking back at 7 bars, which is why it's an intraday scalping tool. It's not a longer term swing or trend trading tool. That's what we use the array for, and I got that over in NinjaTrader, I think, on one of the workspaces. In fact, I think I've got it here as well. So always bear that in mind, that the currency matrix was developed very much with an intraday perspective to help you make those decisions, because what you want to see is you want to see this scenario move through across into the 3, ultimately out to the 5. At the moment, the yen pairs there are pretty much up at the top. So what we're not seeing is we're not seeing this sentiment move through. So this looks like, at the moment, at any rate, it's very much a short-term sentiment, because if it were trending, then what we would see is we would see the pairs here starting to move lower, and we would certainly see these pairs here come off the top here and also move low, and we're not seeing that at the moment. So it's a kind of mixed picture at the moment, and if these start to lift off here, then what this is telling you is that this is just a temporary blip in terms of a minor pullback, minor reversal, and all of these are going to move higher here. And obviously, always the excuse me, the slower time frames will always dominate. So the slower the time frame, the more significant will be the event, and that applies whether it's support and resistance, indicators, whatever it may be. Let me just drop that out the way and move that out the way. And this is on the New Zealand yen, but actually what I wanted to go to was, where are we? Let's have a look. Not that one, this one. There we are. Because on here I've got the currency matrix and I've also got the currency array, very fast time frames, but the principle I wanted to show you was really when we isolate out on the currency array. The currency array, in fact, let's put that on a slower time frame. Let's put that on there. Let's put it on 5. Let's wait for that to load up for a minute. You've got the matrix here, which, in fact, just click on that for a moment. Let me just show it. That's the look back period I was referring to. So the look back period here is 7. As I say, it's very short, and that's why these move around rapidly. When we move over to the currency array, if I do the same thing on the currency array, go to indicators, currency array, there we go. The look back period on there is 80, so it's much, much slower. And that's why it looks a little bit different. I've isolate out on yen, there we go. That'll just flick down. And this gives you a very visual, graphical display on what we were looking at in terms of the matrix. And what this also tells you, it tells you which is the weakest, which is the dollar yen up here, because this is the furthest off the midpoint, if you like. This is the fulcrum, if you like, at 0 up here. And when the sentiment is shifting, the beauty of the array is it gives you a very visual picture, because these will all sweep up to the upper level if the sentiment is universal across the matrix, or they'll all sweep down to the downside. And it also tells you the strength of trend, which has got the strongest trend in it. And at the moment, it's the dollar yen, certainly on the 5-minute time horizon. And they're all stacked up. And this is the phenomenon I was referring to in terms of currency matrix, this stacking effect. In addition to that, on the currency array, you also have this second column, which is telling you when a potential currency is overbought or oversold, and they come up as oversold in bright colors. So the CAD switch, as you can see, is flagging up potentially oversold because it's bright red. These ones are moving towards a potential oversold condition, but haven't actually got there yet in brackets. So when it goes without the brackets and bright red, then they've gone to oversold. And similarly at the top, you've got overbought in the same way. So you kind of use these three instruments together. You've got the currency strength on the left-hand side, you've got the currency matrix, and you've got the currency array. And they're really giving you a perspective in all the different aspects of trying to bring together the elements that you want and need in order to make decisions without obviously looking at the chart. These are they're rather like, I suppose the closest analogy would be to being a pilot, because generally speaking, I hope so anyway, generally speaking, a pilot is looking out of the window to make sure that we're not going to crash into anything and just seeing what's going on around them and whether they're on the ground or in the air. Once they're in the air, they have all these instruments around them, but their primary focus is on what's going on outside, and then they will glance at their instrument panel. And this, if you like, is like your instrument panel, because the currency strength indicator is breaking everything down into constituent components in terms of the individual currencies. The currency matrix is then reassembling those into currency pairs, but on a very fast time frame. And the currency array is then giving that information over a much slower time horizon. So really, if you like, these are your three key indicators. Now, there is one more in the Forex suite of tools, which is the currency heat map. And the currency heat map looks at it over a much slower time frame, because in there, the currency pairs are actually weighted according to the time horizon. So as I mentioned earlier on, the slower the time, the greater the weight. So if something is happening in a currency pair on a weekly, that is going to carry much more significance in terms of weighting than something that's happening on a 1-minute chart. And that's just common sense tells you that. And the beauty of it all is visual. I mean, I don't need to look at a chart now. I can see that the Aussie, the blue line, just pull that over a little bit. There we are. Aussie's just starting to climb. This is 1 minute, bear in mind. So this is, very fast. CAD's rolled over. We got the pound rising a little bit. Yen sort of going sideways. Aussie's the green line. The Swiss has sold off a little bit, and so on and so forth. And what you're looking for constantly is, or I say constantly, but typically what we're looking at are the outer regions. So we're looking for overbought or versus oversold. What opportunities have we got? And we use this in multiple timeframes. And secondly, if we're going to go from those extremes, we have to set wider stop losses and allow for the buffering. But the quid pro quo is we get in early, we make more money. If you're a trend trader, once this move is underway, then you're jumping on the trend. It's already underway, so your stop loss can be tighter, but your return is going to be less in terms of the overall trend because you've lost the initial part of the trend because you didn't get in early enough. Simple as that. It's all about payoff and return. Let me just let me see what else we got. Dave trading. We've got, not sure what pair I've got on here. I've got the Aussie yen on here. This is on the VRSI, and this is the volume relative strength indicator, which we've rolled out on Ninja, and we've also rolled out on TradingView as well. And it's a sister indicator to volume price analysis itself because it looks at the relative nature of volume. Again, it's very intuitive, it's very colorful. It replicates volume in the sense that what we look at here is pressure, because what you want to see in a trend is pressure building and supporting the trend. And the nice thing about the analysis of it is when you look at it, in this example here, for example, you can see the pressure is waning, and that really is replicated by the volume falling away. So the way you analyze a VRSI graphic is very similar to the way you analyze volume. And that's why we developed it, because it gives us another view of the relative nature of volume as a trend is developing or as a trend is not developing, as is the case here. The trend is just come to a standstill. The pressure here is absolutely minimal. We're not going anywhere for the time being because there is no pressure to do that. And equally down here, you can see the volume has waned away quite significantly. The bars are narrow. It's what you expect to see. That's not to say that volume and price are not in agreement. They are. The spread of the candle here is relatively narrow, or is very narrow, and we've got low volume. This is the sort of price action that you expect to see in a congestion phase. It's narrow candles and low volume. It's very, very simple. That's how it works. And that's the beauty of volume price analysis. And the other beauty of it is that you can apply it in any which way you like. You don't have to change your methodology. If you've been using an alternative, your Fibonacci or your Elliott wave or whatever it may be, or you're using Bollinger Bands or moving averages, you can bolt volume price analysis in underneath. And really, that's what comes across from a lot of the messages that we see on Amazon, on the books, because a lot of traders struggle. We were very fortunate. We came to volume in this curious way that you may have read about. It was very odd, very strange, but that's what happened for us. We were very fortunate. We started with volume. Not everyone's that lucky. Not everyone's that fortunate. We were, and we're very grateful for it. Right, where are we? I think, darling, is there anything else you wanted to add to that?
No, that was it. I mean, it's happened exactly as I said. It's all going to grind down now.
It's coming to the end of the session. It's been an explosive day. Now what we have to wait and see is how the price action develops thereafter. There's a lot of price action that's gone within the volatility candles. So we've got, we're expecting a sideways price action. It'll be interesting to see how this unfolds in terms of risk assets, particularly in stocks, because as we always maintain, Forex sits at the heart. And as Anna said, Forex sits at the heart of everything. It really, truly does. So there we go. I don't think there's a lot I can add to that now, other than what we've already said. So I think it's probably time to wrap up there, unless there are any other questions. Just to highlight one or two bits and pieces. Let's go over that. There we go. This is where you'll find all the indicators over at quantumtrading.com. MT45, NinjaTrader 7.8, TradingView, and TradeStation. Remember, if you invest in the full package with us, then you get all these new indicators free of charge. That's just the way we work. We've always done that. It's just our way of saying thank you for putting your confidence in us. But that aside, even if you've only bought one or two indicators over the years, we will have you on the system somewhere. We get this a lot. People want to upgrade to a full package, or they want to use that credit to upgrade to the Forex program, or indeed the stock program when it's going to be rolled out shortly. Absolutely, we will have you on the system, and that's what we do. We've always done that for our customers. So whatever you invested in the past, it doesn't matter how far back you go. We've got customers going back 11 years or so, and we have you on the system, so absolutely no problem at all. This is the Forex education program. Very, very successful. I'm very grateful, and it's lovely. We've got so many students on it. You may have seen Keith in the chat box referring to the funded Forex program. We've currently got that on hold briefly because we've expanded it to include other levels. We started off with, and this is basically where you trade our money. The reason we bolted this into the program was because we wanted to give our students the opportunity to trade much larger size accounts, but with no risk. There's a one-off fee you pay to entry. It's like a ticket, if you will. You go to the cinema, or the opera, whatever it is, or a play, and you pay your entry ticket, and that's it. You're done. It's the same here. It's a one-off fee, and that's it. You then trade our money. You can go from the new accounts will go up to 20,000, but we're starting at 1,000. We originally started at 5, but now we're adding in 1 and 2.5, and then 20 up at the top. You select which level you want to go in at, and then when you hit a particular target, which is very straightforward, we've simplified a lot of it out. We've also added in a whole number of different markets now. So rather than just Forex, you can trade indices around the globe, massive number of indices. Cryptocurrencies are in there, the 28 Forex pairs, and also commodities. So we've really opened it up. We've made it much simpler, less, very little risk management there. I'm not saying you can do exactly what you want, but pretty much. And you trade our money. And then when you hit that level, we multiply it by 4. So if you start at the top level now, 20,000, we'll increase that to 80,000. And then we double it thereafter, and you go all the way up to 2 million. You earn, there's kickbacks, there's all sorts of stuff that we do as well alongside all of that. But the primary reason we added it in was to give our students the opportunity to really leverage their knowledge and earn at the same time. So put it into practice. Simple as that. This is Anna's site, annacouling.com. You find all the books there. And just had this page up here. The VPA book there, God bless it, is bestseller in the Forex category, and all the other books up there. And I have to say, it's very humbling to read a lot of those comments, and you can find all the links here into Amazon. They will be going into other channels soon. We've just released a color version of the VPA book, and we're also uploading them in paperbacks as well. I think the VPA and the stock book are already done in paperback, but all the others will be done as well in hardback rather, in due course. And these two in color. I'm not sure we're going to do the others in color, but there we go. We will see. So thank you so much for coming along today. Hope you've enjoyed it. As Anna said, if you have any questions, we're always happy to answer them. David@quantumtrading.com or Anna@annacouling.com, and be happy to answer those for you. So thanks for coming today. Hope you've enjoyed it. Enjoy the rest of the trading day and the rest of the trading week. We will be back next week, I think, for the last ones before the Christmas break. So enjoy the rest of the time. So thanks again, and bye for now.